Thanks for joining us. A little bit of miscalculation there on my part, so there are actually 4 panelists here. Okay, so going to start off in the same way that Laurent did with our previous panel, and how we're probably going to start with most of our panels this morning, which is just to ask you to take 2 minutes. I am going to time you all, just to tell me a little bit about yourselves and about your company. So Ricky, since you're at the end there, and you're I'm sure you're wide awake after last night, we'll start with you.
Absolutely. Hi guys, how you doing? Ricky Knox, founder and CEO of Tandem Bank. Prior to this, set up a few different tech businesses, including Asimo. Little shout out for Asimo's in the audience, Mike Kent's in the audience today, and small financial services, and now building one of the next generation banks. Tandem Bank received its license in November 15, and now we just completed an acquisition of Harrods, which is Harrods Bank, which was started in 1893. So just bought a very old bank and turning it into a new one.
Hi, I'm Valentin, the CEO and one of the founders of N26. We are, I would say, the first bank maybe our customers love to use. We're based in Germany. Overall, we have more than 500,000 customers in 17 countries in Europe today. We're announcing today that we have more than 200,000 customers in the French market within the last 12 months. So it took us about 7 months to get the first 100,000, about 5 months now to get the second 100,000. And I would say we're one of the fastest growing banks in Europe. And I'm looking forward to the discussion.
Good morning. I'm Anne Boden. I'm the CEO and founder of Starling Bank. After about 30 years in traditional banking, in the payments industry, in transaction banking, I quit the old banks to start a new bank in 2014. Starling Bank is now offering retail consumer app-only banking in the UK. We've also got a business account coming out soon. But what's, I think, most relevant to this audience here today is that we also have a vibrant marketplace. We have a lot of permissions, so we can actually offer lots of other financial services products to our customers. And we have a thriving payments business where we offer faster payments, SEPA payments, remember as a target to the fintech community. So as well as offering services to consumers and businesses, you here in the audience here today are also my customers.
Hi, I'm Nick. So I'm founder of a company called Revolut, and we are better than a bank. Now we have 1.4 million customers, so we're opening about 5 to 10,000 new accounts every day. So opening about 90 business accounts. And that's all we achieved within 2.5 years. And if you want to try our products, so we have cards giveaway just in that corner after this session. Thank you.
All right, well, thanks for the plug there, Nick, and thanks all of you for that introduction. Now, it's an opportune moment to be having this discussion about neobanks and their kind of impact on the market, because, of course, we just this month have had the introduction of PSD2, or open banking, which is allowing customers to give their banks permission to share the data that they have on their with startups such as yourselves. Were all of you guys just breaking out the champagne when that came into effect?
Definitely for us. I mean, I built the last 2 businesses around PSD1, which is a change in payments regulation that allowed Asimo and Small World to be built. And so when we started building Tandem, we were designing around PSD2 and what was coming next. So at the heart of Tandem, and actually different from everyone here on this panel, we allow you to, and have allowed you for the last year, to link all your accounts together and view, and eventually with PSD2 we will allow you to pay from and to your current account. So our thesis is that the current account will no longer be the core product, the core platform on which everything else is built, and indeed we offer credit card products, loan products, savings accounts around the edge of the PSD2 application. So you don't need to change your current account anymore.
I think there's a lot of assumptions around how PSD2 is going to be used. I think in the introduction you said it's about fintechs bolting on top of banks. One of the first implementations in the UK was Yolt, owned by ING, a bank, traditional bank, bolting onto a new bank, Starling. So what we have with PSD2 is breaking up the value chain for the first time. I spent 30 years trying to cross-sell and upsell products in the banking world. I concluded that model was actually sort of old, past its usefulness, and you had to break up that value chain into things that really added specific value to customers. I think the biggest threat we have here is that we don't take advantage of really focusing on what we do really, really well. And unless the banking industry wakes up, you'll have a situation, it won't be the new fintechs sitting on top of banks, it'll be the likes of Amazon and big tech providing the customer interfaces, the customer intimacy, and that will be connecting onto old banks that provide the rails. This is a wake-up for us all. PSD2, just like PSD1, is great for consumers, it drives innovation, it makes a market that's far more competitive. But I think we're going to see a lot of change coming up. You know, the new banks here will drive competition, but the breaking up of the industry will cause even more competition.
I'm sorry, why is it a problem if, maybe it's a problem for you, but perhaps not for consumers if Amazon or Facebook or whoever come in?
I've never said it was a problem. What I'm trying to say is the fact that if we talk into an industry, we here should not be complacent. We shouldn't be talking about, you know, banks providing the plumbing and new fintechs providing better customer experience. We all could be subject to a big revolution whereby new players come in and actually help companies with their working capital by providing better payments, faster payments, better customer experience. And we, as an industry, are left out in the cold.
Valentin.
So I think if you look at PSD2, I think the impact is definitely going to accelerate the interchange of data between banks. But if you look at it today, in Germany, you can already do the same. So we today, for example, if you join us as a new customer, and we don't have enough data about you, you give us the credentials of your traditional bank account, and we scan the last 2 years, and based on that, we take our credit decision. So I think the industry is a little bit overestimating the impact of PSD2. I think if you want to have a modern interface that takes more than just the data you have on your account, you can do that already today in a couple of the markets. But in general, I agree. I think the basis of the bank of the future is going to be how smart this bank is going to be. And to be smart, you need to have enough data, and that PSD2 is definitely something that is driving that. And the other thing I think that PSD2 is having, it's making the line between current account and other products even more blurry. And if you look at our product today, we, for example, offer a savings account, but we don't do the savings account ourselves, but we do it with 15 other banks in Europe, and whoever pays the highest interest, our customers invest with that bank. I think with PSD2, such things will be much more enforced, and I think you will have a specialization of the value chain. You will have certain banks just focusing on saving products, others just focusing on credit, maybe other players coming in like insurances and focusing on underwriting consumer credits and something like this. Yeah.
Nick?
Well, I think it's very cool. So PSD2 allows, for example, us to load money directly from another bank account to Revolut account. That's number one. And number two, it actually allows you to compete, I think, directly with MasterCard and Visa, because right now, online, you won't need to pay with a card. You'll pay directly with your bank account. And that's, I think, huge.
And just coming back to something that Anne was just saying a moment ago, I mean, we do have these big tech companies out there with huge amounts of resources, huge ability to use data, to use artificial intelligence, or whatever it is that they need to kind of stay one step ahead. Is it your biggest fear? Are those the kind of potential competitors that keep you guys awake at night? Is it the Amazons and the Facebooks of this world, or is it still each other and perhaps the incumbent banks when they get their act together?
Well, I disagree. I'm not, particularly scared about GAFA or whatever acronym you want to use. I mean, Asimo had an offer from Facebook a few years ago. Michael went out and met with Mark Zuckerberg, and talked about sort of their vision for financial services, was offered the role of sort of head of financial services there. And the truth is, certainly at that point, they had literally no idea what they were doing in the area and didn't understand the complexities of financial services at all. Also have access to some of the senior guys at Google and some of the conversation that goes on there. And they are, pathologically afraid of the regulation that comes with, with banking. And I actually think there's an interesting one because people go, well, are they therefore going to become the interface with the consumer? I think actually, were they to become the interface with the consumer, were Google to step into that role, they would potentially be stealth-regulated. And people come in and say, actually, you guys need to come under this regulatory umbrella. And I think they want nothing less. You've got to remember, they've got every other industry in the world to go and kill as well. So, there's quite a bit to go after. I actually don't think that they're going to be the key source of competition going forward.
Okay, we've got a bit of hissing on the coming from the speakers there. I don't know if we can do something about it. There we go, it's gone. Nick, what's your take on that?
Well, I think there will be competition. Whether it will be big enough, I doubt it. I mean, exactly because of the same reason. It's just, if I'm running a big business, which brings me, I don't know, $40 billion a year, right? Do I really want to kind of, sacrifice it for some potential opportunity in fintech? Probably no, right? So I'll probably put 80-90% of my resources on protecting this business. And then I'll play maybe with some fintech business on the side. But I would never push 100% of my focus into it. But in life, if you never put 100% focus, it never works. Right?
And I guess maybe the big guys out there, the Amazons, Googles, and whatnot, that they've kind of got their hands full with regulators in other areas. They really want to kind of wake the beast by stepping into another area, a minefield like fintech.
I don't think the big tech will become banks, but I do think that we are at the start of a reconfiguration of the industry. If you actually think what's happened to date, we have so many new organizations, new fintechs entering the market, raising customer expectations, giving great service at low prices. I believe the big banks will copy all the apps and all the services. And that will happen in probably about 2 or 3 years' time, where all the services that the new fintechs are offering will be easily offered by the new banks, by the existing banks. The problem they have is not being able to cut their cost base quickly enough. And I think the big battle coming out is going to be a cost-based battle rather than an innovation battle. And in this world, where the banks are really, really focusing on cutting their cost base, which has to go from hundreds and hundreds of millions, even billions, to a lot less to actually compete in this new marketplace, then they could actually neglect the consumer side of it all, and then big tech could come in.
And if they end up copying all of your, will they just copy it off their own back, or will they just kind of subsume you guys into their operations?
I think we have to realize as an industry that what we're doing is raising customer expectations, giving ideas, and big banks will copy, and it's happening all the time. And that is not going to be the innovation. The innovation is going to be able to offer great customer experience and great apps and great service at low price. Banking at the moment is too expensive. And the price points have to change. And what's happening with fintech is we're providing that challenge, bringing down costs. And the battle is going to be the cost base, not innovation.
Valentin?
So I would agree with the broader idea of the panel. I think in general, I don't see Google and Facebook moving in that services. I think for Amazon, it would make more sense because also maybe they could combine it with more giving out credits for being able to purchase things. But I think that the bank of the future will much more look like the timeline of Facebook than it's looking today.
Okay. Now, you're all startups, so obviously your businesses, your ultimate aim is to be profitable, to be making money, to stand alone and not need to keep raising finance. Where are we now on that front? Is it too early to be asking you kind of, when are you guys going to start making serious money? When are you guys going to start being profitable and perhaps no longer have this startup moniker hang around you and just be, a fast-growing company?
I think it's fair to say that in the early stage of a company, you're after growth. But you have to see the revenue. You have to see the end game. What we've done at Starling is to realize that having a banking license, being at the forefront of providing this sort of technology consumers costs money. And that's why we have quite a diverse revenue stream. We have a B2B business, we have contracts with governments and other big fintechs that actually supports our revenue in the early days. But most of us, will be becoming sort of profitable in the next couple of years.
So that's Starling Bank will be profitable in the next couple of years?
Yeah.
Okay.
We are heading towards profitability by the end of 2019. And I think that the majority of us will be in that situation. And when we are then in a profitable state, I think then the real innovation will come and the real threat to the incumbents.
Nick?
Well, we are already profitable, right? So now it's just a question of scaling it fast enough.
Okay. Valentin?
I think we're the only one in the challenger space is actually earning money on customers. I mean, maybe Revolut is as well. I don't know. But I think profitability is always a function of how much you grow and how much you can do. But I think it's important. I think you cannot be profitable if you don't have your own banking license, because then the cost is much too high, because you normally have to pay a banking partner. For us, I think the moment we can turn to profitability is 2019 as well. But I think the important thing in any startup is we are already earning money with every customer that we have, so it's profitable growth that we're bringing. And now it's just about getting the right size and kind of being able to pay for the growth even more from your own customer base. Yeah.
Ricky?
Well, we just acquired a business with significant revenues.
This was Harrods Bank, right?
Harrods Bank, exactly. So, we've got one of the higher revenue numbers in the neobank sector. But look, I mean, I think as Anne said, I mean, I think all of us are not that far off from profitability. I mean, I think there's a perception out there, and there are people who are losing money on a marginal basis, although I think you're a little out of date there with accusing everybody else of losing money on a marginal basis. I mean, we don't bring on a negative NPV customer. Every single one of our customers makes money for us from not from the word go, but in terms of their lifetime. But I think I think there's been an assumption out there that there's a load of loss-making business models. I just don't think that's true. I mean, Nikolai's just said they're already in profit. I don't think any of us are that far off.
And so just to be clear, you've already got a banking license?
Yep.
In the UK?
Yes, we've got a
Okay,
banking
and
license.
Valentin, you've got
In
banking
Germany.
In Germany, and you've got British one, and you're applying for one in Lithuania, right?
Yeah, we applied, but we don't have one, for now.
Is that something that's likely to happen soon? And how will that affect the business?
Yeah, so we decided to go a bit deeper into credit model, right? Just to increase margins. So that's the reason why I applied.
Okay. Now I also saw, and this was a question for all of you, but I'm going to start with Nick here. That if I become a premium member of Revolut, I can trade cryptocurrencies, and being a premium member is what, like £5 a month or something?
£7 a month.
£7 a month. First of all, are you concerned that you're feeding into this mania or kind of excitement over cryptocurrencies? I'm sure there are some fans out there. And second of all, how are you going to make money, seeing as one of the biggest problems with crypto seems to be the actual costs of settlement and trading?
Well, we obviously don't settle every transaction, right? We just, hedge it same as we do with other currencies. So for us, crypto or not crypto, it's just, the same hedging machine that we use.
And but are you concerned that kind of making it so easy to trade cryptocurrencies when you've got, you got your bank account here, and then you can buy some Bitcoin here? Is this going to kind of tempt people to do things that perhaps they shouldn't be doing?
Yeah, but we're all here to make people's life easier, right? So what's the point for a customer to go through, I don't know, tens of sign up forms and then top up account by bank transfer and then buy cryptocurrency in 2 days? It's just not convenient, right? If we offer one click buy and sell cryptocurrency, it's good for everyone.
And open this up to the rest of you. Any thoughts on adding crypto capabilities to your offering to customers? Anne?
Yeah, I think that if I was on the stage this time last year, my answer would be that we don't think it's mainstream, we don't think our customers want it. I think things are changing. I think it's becoming mainstream. It's probably not Bitcoin, but it could be other cryptocurrencies. I think that mainstream banks, incumbent banks, are considering cryptocurrencies very seriously. I think that it'll become easier to settle these instruments in future. And I think this time next year, you'll find far more people in this room actually doing things seriously with such currencies.
So this time next year, maybe Starling will be offering this capability?
Not necessarily. I think that we're very open-minded about it. I think Starling's all about responding to what customers really want. Last year, there was no need. I think this year we have a number of customers coming to us that are very interested, and we serve our customers. But if I was saying this time next year, yes or no, I think it would probably be no. But I think that we have to wake up to the fact that these things are going mainstream.
Ricky?
Yeah, I mean, I think we're slightly missing the point. I mean, I think it's awesome what Revolut are doing with crypto and a very smart way of enhancing the referral marketing, which is really good. But I think we're slightly missing the point around cryptocurrency, because what you're actually talking about is a group of trustless technologies that allow trustless interchange, which I think are going to sit at the heart of the financial system over the course, even in the next few years. You're going to see, not just startups, but mainstream organizations using the underlying technologies, sometimes referred to as distributed ledger, et cetera. And we're certainly already working on it. We think there are a load of really useful applications for this technology, across the banking piece. We won't be offering Bitcoin anytime soon.
Valentin, I think you were telling me last night that there was someone in the States that started offering this and they kind of stopped doing it. But are you planning on doing this?
So I think definitely there's a big value to offering cryptocurrencies, especially on the PR side, on the attention side, because media is especially reporting a lot about it. At N26, we are more focused on, I'd say, the problems that we get from our customers to solve that are daily problems. Like how do you open a bank account? How do you set up standing orders? How do you get a credit? How do you do savings? So we focus on the first ones, and we have a list, and we get a lot of requests of customers. So it might be maybe second half of the year that we do something more in the cryptocurrency area. But for now, it's not planned. We really focus on the bigger things. I think one of the big things coming up is also for the French market, for the 200,000 customers that we've reached there, to offer them more local saving products, to offer them more local credit products. So I think we're more focused on the core problems of the financial industry right now. So.
Now, I mean, you're all doing things slightly differently, but at your heart, you're providing some or all of the kind of banking services that we would expect to get from a bank, whether it's current accounts or payments or credit cards or insurance. As you grow, as you expand your revenue streams by moving into other areas that you're not doing now, aren't you all just going to look the same in a few years' time? And if that is the case, then aren't you all going to end up either joining forces with one another or kind of forming part of a larger institution? Who wants to take that one on first? Ricky?
It's a bit of a strange question, to be honest. I mean, you could say, well, there were loads of browsers early in the 90s, and aren't they all going to join up? And I don't know, some people in the audience here will remember when Yahoo was well ahead of Google. I think the truth is we're in very early days. I think there's been an assumption, and even a year ago when we were sitting here, people would have said, all these neobanks are going to be bought up, by the big banks. That hasn't happened as yet. I think in the long-term evolution, I think there will be some of us that win and become, some of the sort of larger next-generation banks. I think there will be people who are bought along the way. I think the threat needs to get a lot more real. I mean, an interesting thing about crypto has been, last year, as Anne said, crypto didn't feel very real. With the massive speculative surge you've seen in cryptocurrencies, suddenly it is a lot more real to people. And I think you'll see, you already see, Valentin's talking about 200,000 customers here, 500,000 customers overall, over 1 million customers at Revolut. I think there is already a surge going on, and the question is, when are the banks going to turn around and go, shit, we've got to acquire into this, otherwise we're going to be run over. But that's a little way off.
And do you wanna-
I think that at the moment we're incredibly interesting to the big banks. You know, all of us get visits from CEOs of big banks
Not in
all
the dead of
time.
night. This is kind
Sorry?
of, not in the dead of night.
Okay. I think that if you look at the people on this panel, we're all very, very different to each other, but to the outside looking in, we look very much the same. If you're looking from a big bank at the new neobanks coming along, people like ourselves, the digital banks, they see a unified force disrupting, improving customers' experience. But customers see the differences between us. Certain customers, most customers in the fintech world will try all of us, and then they'll find one they really like. So but I think we have more differentiation between us than the big banks have between them. It's very, very difficult to go to a big bank, an incumbent bank, and actually find out what the difference between one and the other is. The carpets may be different, the sofa may be a different color, but I think for the people who understand the industry, they see different things in these new digital banks.
Nick?
I think same as in any industry, right? We'll see big consolidation. I think in the next 5-10 years, who knows? There will be just few extremely huge players, right, which would control the whole market.
But I suppose part of the point of neobanks, or one of the reasons why why it's been made not easy, but why governments and regulators are keen on them, is to shake up the big banks, is to provide more competition. Are they really going to let all of this consolidation that you say is likely to happen take place?
Yeah, but it'll be the same as with Google or Facebook, right? So for consumers, service will be free, and organizations will make money on, say, B2B products or B2B2C.
Okay. Valentin?
Yeah, I think I think that the challenge is more about, if you look at the UK market or if you look at the French market, I think 80% of the market is about 80% of the market is owned by the 4 big banks. So I think it's not so much about the competition between each other. I think we today the fastest growing bank in most of the markets. So it's about winning like 1 million customers from Société Générale, and it's about winning 1 million customers from HSBC and these players, maybe 5 million, maybe 10 million. Yeah, I think that's what we are focused on, and we see that people want to have a better banking experience, and they're happy to switch to new players that offer them better service at better price. Yeah.
But is this kind of, I mean, you've talked about 200,000 customers here in France, and you're saying you've got 1 million customers or something. Are we really seeing a dent being made into banking, whether it's in the UK, whether it's across Europe or whatnot? Are we actually seeing this kind of neobank revolution really making a difference, given that it's been promised for kind of so long? And I'm just wondering if it's actually already here, or if we're almost there.
So I think when you look at, obviously the absolute number of customers is still like much lower than with the big banks. But if you compare us to like the big German banks, the really big ones, they have about 25 to 30 million customers each. But each of them is losing customers every year. And we are growing with like more than 2,000 customers a day. Yeah? So the question is not like, is it going to happen? It's happening right now. If you look at the new customer growth, it's happening with the new players.
But at this rate, what I mean is, like, when are you going to, like, you said 200,000 customers in France. How much market share is that, for example?
That's small, because definitely it's like, but the question is how much do you grow a day? And
right,
then
but
how much
what I'm
does it
saying
take?
is if at this rate, does it mean in 5 years' time you're going to be a massive player, in 10 years, 20
So
years?
I think if you like, we are aiming for a couple of million customers within the next 3 years, yeah. So, and then if you have 5 to 10 million customers within, let's say, the next 5 years, I think then you really like, you are at least. I mean, we are going to be next year. We're going to be top 10 banks in Germany, yeah. So I think like, and then you are almost top 10 banks in Europe if you grow to 5 million, 10 million customers, yeah.
Okay. So moving on, and I'm sorry to bring this up again, but I guess it's, I saw that there is actually no direct translation of l'éléphant dans la pièce, like that doesn't translate well, you can't say the elephant in the room, but talking about Brexit, I believe it's le dit non dit, I think they say in France. Brexit, start with, well, let's start with Nikolai here, because he was last to begin with. Is it affecting you in any way? Do you expect it to affect you? And what planning have you got in place to deal with it?
To be honest, we didn't see any effects so far. So funding is still there, talent is there. you can still, bring people from abroad to work in the UK. In terms of licenses, there might be some problems in the future, but again, they are solvable. So in our case, we applied for a license in Europe. We have a license in the UK, so we are covered.
So you already have a license in the UK?
Yes. Yeah.
Okay. So you've got both bases covered,
Yeah.
if the worst happens.
Yeah.
Anne?
Well, we've passported into Ireland. We're setting up our Irish operation now, and we'll use Ireland in order to support our European expansion. I've run businesses, 30, 40 countries across Europe, some of them in the Eurozone, some of them not. I think that most things we can live with. Brexit was unfortunate. I think that we're getting stuck in now and figuring out how it's going to work. There's a lot of obstacles to getting a startup off the ground, and Brexit is not going to stop people like this.
Right, but presumably it's a headache you could do without.
Yeah, but we're through that stage now. I think that we've come to figure out how it's going to work. We have plans in place, and those plans are very tangible and very doable. I think that for us, Europe is very, very important. It's always been very important, and we are a long way down the line of actually launching that European plan.
So whether passporting rights remain for UK banks or not, that's all factored into your planning and everything. Okay. Valentin?
So we are currently operating on a full banking license from Germany, and it's passported in all the European countries, so also into the UK. So that means currently we can operate in the UK. I expect us to be able to operate also after Brexit. So I think there will be regulation in place at that point in time, either that you can keep the license and still passport, or a quick process to get a UK license. But how should it otherwise work? Yeah, if you have 1 million or 2 million customers by then, I don't expect the regulator to come to us and say tomorrow you have to stop working there. So.
Okay, Ricky?
Yeah, well, I'm sort of pretty strongly anti-Brexit at a personal level. I don't think it's had any impact yet. I do think the challenge will be at a talent level. I think London is a talent magnet at the moment. Not that Paris isn't, guys, but we had a little debate last night around this. Also had the Dean of INSEAD come over recently and try and convince me that Paris was the new capital of fintech, which, obviously in this company, obviously is.
We're going to have the president of the Ile-de-France region coming on stage later to tell us exactly why Paris is a better place for fintech founders to come to. But sorry, Karen.
But I do think there'll be a talent challenge because when I look at my employee base, there's probably under 10% of people are actually UK born or hold a UK passport. So I think that will definitely have an impact going forwards.
So, I mean, I'm glad you brought up this battle for talent. There was an op-ed I think, on Bloomberg just the other day, and Lendinvest and Market Invoice were quoted in it, among others, and Go Cardless, I think, as well, who will be on stage as well later today. Is this going to prove a problem? I mean, particularly perhaps for Anne and Ricky, where your HQs are in the UK, retaining and adding to your talent base if perhaps the economy does take a nosedive or bank or the finance industry is impacted. Is that going to affect you, do you think?
I don't think so. I think that when you actually look at where our talent comes from at the moment, it comes from all over the world. It's not just Europe. I think that most of us are used to working in a very distributed way. I think at one stage in one of my previous jobs, I had 300 staff in 19 countries. I think that we've gone a long way from where we were. We don't all need to be in one country in order to run a business.
Okay. Nick?
Well, to be honest, I think in fintechs, you obviously need to hire talented people, right? And they're usually high skilled. And I'm sure after Brexit, there will be some kind of structure when you can still create a visa for them, right, and bring them to UK if needed.
Valentin?
So I think for us, we're based in Berlin, so for us there's definitely a positive effect of Brexit. We see more applications, we see more people actually moving from the UK because they're pissed off in terms of the Brexit. So I think we see that effect, like factually happening. But in the end, you still have to recruit the best people, is always tough.
Okay. So we just got 5 minutes left. Just want to take 1 minute each, perhaps, for you to give us, look into your crystal balls or use your predictive analytics engine and your artificial intelligence to tell us where do you think things are going to be for yourselves and for the industry, perhaps in 1 year and in 5 years' time as well. Let's start with Ricky.
So a year away, I think you're going to see, the debate, the question you were asking earlier, which is this really happening, becoming just a bit obvious. I think you're going to see multiple players with millions of customers in the neobank space. You'll see some of the larger ones heading towards, as you're saying, the top 10 tables in various countries. And looking out 5 years and further, I think there'll be start to be some restructure in industry structure. And coming back to where we're talking about, I do think there will be acquisitions. I do think there will be some consolidation. There will be purchases by traditional banks. You'll also see some of the traditional banks starting to separate themselves and pull away and actually demonstrate that they're adapting and changing their approach to technology. And a lot of people have sort of called that out so far, but I think there's been very little real traction in terms of their advancement there. So I think you'll start to see shifts in market structure, but I think one of the challenges in banking is that actually because of capital and because of the regulatory capital you need to raise, sometimes the timescales are somewhat longer. So I think it'll really be a 10-year picture before you see a dramatically different industry structure.
Okay. Valentin?
So I think for us, the next year is really about going from a couple of 100,000 customers to a couple of million customers.
Just in France?
Yeah, hopefully also in France. Yeah, okay. So France is one of the strongest growing markets for us. I think besides that, I think for the consumers, it means that banking will put them even more in the center. I think what we are going to do on the product side in the next 2 years is going to be things that the traditional banks haven't been doing at all. Yeah, putting the customer much more in the center, moving much more towards other functions that you wouldn't have expected from a bank, leveraging our infrastructure. So I think for the consumers, will be a lot of benefits. It will be much cheaper. And then in the industry, I think there will be massive shifts of market shares to newer players.
I think that we're all very excited and that consumers are going to win in the next couple of years. I think we are very excited at Starling Bank about our marketplace, where we bring in lots of fintechs and big companies together that provide financial services to consumers in a marketplace. And we're hoping to be making some big announcements in the UK next couple of weeks. And this time next year, we've also got a few sort of French companies who are going to be joining the marketplace as well. So I think we've got a great future. Companies like this, I think, will actually become mainstream over the next couple of years. And we'll be improving customer service, giving customers great value, and above all, giving customers choice. And that's what's important.
Nick?
I think in the next 2 years, we'll see some of local champions, right, in this space becoming global champions. And then we'll see probably some local players going out of the business. Yeah, that's what I say. And in terms of products, I think they'll become much smarter and much more sophisticated as well for consumers. Something we've never seen before.
Okay. Well, on that note, just want to thank all of our panelists, Ricky Knox, CEO of Tandem, Valentin Stalf, CEO of N26, Anne Boden, CEO of Starling Bank, and Nikolai Storonsky, CEO of Revolut.